Hi everyone. So today's video, what I want to talk about is the two worst mistakes you can make when getting a company car through your business. I want to cover these because we often catch clients while they're just about to make these mistakes. So normally we can stop it, but sometimes we talk to clients who come on from other accountants, and unfortunately at that point it's too late. So the point of this video is just cover these two things that you should really think about carefully when you're thinking of getting a company car from the business. Firstly, let's just quickly talk about why a company car through your business can be a good thing. So sometimes when you get a car through your business, or most of the time when you get a car through your business, you can actually put through the car cost through your business. So what it does is it lowers your taxable profit, which means you save corporation tax. Sometimes you can get VAT savings on it as well. And a lot of people want to do that because of those savings. But the other side of that is because the business is providing you with a car, you also have benefit in kind taxes, which say, okay, this car should be treated like if it was a salary. So you got to pay X amount of tax on it. Certain cars, like electric cars, they have very low benefit in kind tax, which means the amount you save by putting it through your business is substantially often more than the amount you pay in benefit in kind tax. But this takes me to the first big mistake people make when putting a car through their business. And this mistake is essentially they get a non-electric or non-plug-in hybrid car. So with an electric or plug-in hybrid car, the benefit in kind taxes are usually so low, it makes sense to put it through your company. And most of the time, nearly all the time with an electric car, a lot of the time with a plug-in hybrid. The offside of that, though, is if you get a diesel or petrol car or a non-plug-in hybrid, the benefit in kind taxes are so substantial that they dwarf the amount you actually save by putting the car through the business by not having to pay less corporation tax and less dividend tax and less VAT. So that's why it's really important when you're thinking about getting a company car, just make sure you get the right kind of car. If you've got your heart set on an electric car, if you got your heart set on a petrol or diesel car, your best bet is to try and own that personally if you can, and then get the company to reimburse you for the mileage, because quite often it's not a good idea to put it through the business just because of the extortionate benefit in kind taxes. The second mistake people make is essentially like leasing a car or getting a car on finance is really complicated. There doesn't seem to be a standard terminology that car sales companies use. And you got PCP, you got BCP, you got PCH, you got BCH. You got the option to just buy it outright. You might call it a hire purchase. You might call it buying it on finance. You might just call it a rental. There's so many different names for the actual nature of the vehicle, but the lease that you're signing up to. And you, with all the best will in the world, you might go into a car showroom and want to get a car through your business. But if you sign the wrong kind of lease and get the wrong kind of agreement, you may accidentally get it in your personal name. You might be thinking, no problem, I'll just rent the car to the business and then it will provide it to me as a company car. That's fine. No, it's not fine. Because if you do that with certain vehicles, you have to make it good. So it doesn't mean the business can then just reimburse you for the cost of the vehicle. What the business has to do is reimburse you at the P11D value of the vehicle. So this is more relevant when you don't want to get a company car, but you accidentally end up getting a company car. What I mean by that is the first point I made about not putting it like diesel, petrol cars through your business. Yeah, it's important. But the other side of that is once you decide not to put them through your business and you go and try and buy a car and you end up accidentally signing a business contract hire agreement, or you accidentally set up a finance agreement in your business's name, at that point, it's a company car whether you like it or not. And that's why you've got to be really careful when you're actually signing up to these agreements that you don't accidentally sign the wrong type of agreement. If you are getting that diesel or petrol car and you want it in your personal name, you've got to be certain that car is absolutely not going to be untaxed under your company, and more importantly, taxed as a benefit in kind for you. So that's the second one. hopefully that's just something to think about. Most people probably won't make that mistake if they've got an accountant, but there are things to keep in mind when you are going to buy that vehicle. Okay, I'll see you at the next video. Thank you. Sometimes you can get VAT back on it depending on the circumstances. However, the other side of saving money by putting expenses for that kind of vehicle through your business is you have a benefit in kind tax on yourself, because the car is giving you, the business is giving you something which is essentially a benefit, so you should pay tax on that benefit. The problem with non-electric, like petrol, diesel cars is